ShayRussell for mining.com.au back again, and joining me today is James Marsh, the CEO of Zeotech. James, it's a pleasure to see you again. How are you?
Very well, thanks, Shay, and good afternoon to you.
What a week it has been for Zeotech. On September the 15th, you signed a binding offtake agreement with MSI for Kaolin direct shipping ore. First and foremost, what is significant about this deal?
Well, this is a very significant deal, and on the world scene, it represents a huge chunk of business. But in the Australian kaolin industry, there's been nothing bigger than this. This is the biggest in terms of volume and in terms of value that's ever been done, and that reflects the quality of the kaolin that we actually have in the ground. Now we can sell this material completely unprocessed, unrefined, and get a very nice margin. And we're looking at over 40% margin for this business, and we've got income of over $200 million, the revenue for just the first 5 years of business.
I wouldn't mind just pausing on the phrase direct shipping ore. Let's be honest, when people think of a product being directly shipped, it normally applies to iron ore. You know, the rock's picked up out of the ground, popped on a ship, and off it goes to a manufacturer. But you're saying this applies to your kaolin project. Why is that? Why is your kaolin suitable for this direct shipping process?
It comes down to the purity again, the size of the resource and the purity of the resource, that we can mine this material exceptionally easy. There's only 2 meters of overburden, which we can just push to one side with a bulldozer. The overburden is actually bauxite that we could sell, fun enough, but we don't want to sell that right now. Then we're into the kaolin, which is just free dig, excavator, a couple of excavators into the trucks, down to the port. So FOB, so it's dumped in a big pile at the port, and then FOB, so the customer takes that material away, removes a huge amount of risk of the business. So exceptionally simple, and so easy that we'll be into cash flow in the first half of next year with only an investment of up to $8 million for the whole mine construction and all the road improvements.
I wouldn't mind drawing your attention to a report that came out from Pitt Street on the 17th of September, and it put forward a share price valuation of 30 to 42 cents. Now, that's a significant jump from where you are now. Tell me, what do you think is underpinning that potential valuation?
It is quite a bullish valuation, but what underpins it is the fact that we will be into a very significant cash flow early next year with a very small investment required for that. And that's not even our core business. This is just basic DSO, just strip mine it and off it goes, make a lot of money. Our core business is the AusPozz, which is our main product, which we're working on, which is the version that we convert that to metakaolin, which is AusPozz, which can be used in concrete. And that was the main product in our pre-feasibility study released in June this year. So the metrics of that are also exceptionally good. So what's being factored in is, okay, the DSO starts next year early. We get some very good cash flow. That contributes then to our AusPozz business, which also needs the mine. So that's already done. The mining's done, the road's done. So that just goes into the AusPozz. And then we move into becoming a major supplier of what is the best quality and highest performance metakaolin worldwide.
Listen, James, congratulations once again on this offtake agreement. It's great to see Zeotech thriving. I appreciate your time today, and I look forward to future updates.
Great. Thank you very much.